Welcome to TheoTrade. This is Don Kaufman. April 26, 2021, seconds after the cash close here on this Monday afternoon. We are waiting on Tesla earnings. In fact, listen, this marketplace, it's ready to go. It is ready to rock. Tesla and all of the big tech companies are releasing earnings within the next couple of trading sessions. And again, we are waiting on Tesla here with bated breath. You know, the interesting thing is, although, you can look in the after hours and you can specifically kind of dig into a chart. And this is for those that do actually watch earnings in the after hours. But I'll tell you what, I'm less kind of keen on watching the chart. I'm less keen on watching, for instance, the bid offer spread. Obviously, the expected move in Tesla, that thing has got to resonate with you. It's a $60 expected move. It's just over an 8% implied move in the marketplace. But as I was saying, it's all about the futures contracts. At this point in time, again, I'm less inclined to want to look specifically at Tesla in the after hours. For me, yeah, I do actually have some positions inside of Tesla, but for me, it's much more what's going to be the broader impact, not only to the Nasdaq, which is, up 0.7% today, clear into the lovely 14,000 range, okay, but the broader impact, of course, to the S&Ps. And with something like Tesla, and again, a $60 price move priced in, this is big time movement that is being implied to the S&Ps. And you'll see the S&Ps jump on this. You're going to see, obviously the futures contracts jump, even the bond market. That is how, for instance, centric some of these large tech companies have effectively become. And yes, today we're passing through Tesla's earnings. In fact, while we're kind of sitting here waiting for the earnings announcements to come out, neither here nor there, give me plenty of time. If you take a look under the stock highlights here specific to thinkorswim, you look at the market cap. All right, so it has a $700 billion market cap, and we could sit here and compare and contrast all day long to something like Amazon with a $1.7 trillion market cap. But with all due respect, okay, and Tesla should definitely gain your respect. You're looking, okay, not just about the earnings, which have almost a 90% implied volatility, but if you look out in time, you're trading a product with around a 70% implied volatility. You cruise over to something like Amazon. And again, I know Amazon has earnings coming out this week, but you look out in time and the implied volatility is literally half, okay? It's not even half of Tesla. So Tesla, if you compare and contrast to Amazon, for example, Tesla, it is a heavyweight. If you kind of volatility adjusted Tesla and said, all right, up against Amazon, for the most part, they're worth about the same. And again, the reality is, though, that something like Tesla still has considerable more movement even than Amazon around an earnings announcement on a percentage basis, and therefore, well, needs to be watched very, very carefully as we do go into these earnings announcements. Now, speaking of earnings, constantly people ask me about, what are some of the most effective earnings and earnings-based trades that you can do. And I'm actually going to show you here a few different ideas momentarily, but one of the first things I'm going to kind of relinquish to you is that I'm not going to sit here and try to handicap, earnings per share. I'm not in this, okay, for the fundamental perspective. You can try to convince me all day long, this is the greatest company that ever was. Okay, listen, that's just here. It's neither here nor there. All right, you're waiting for the Tesla earnings to come out. Doesn't matter, by the way, okay? Look, watch the futures contracts. I know the earnings are out. I don't care what the earnings are. Watch the futures contracts. Sell side activity is hitting the futures contracts. There is definitely movement on the Tesla front, but it was again watching the futures contracts that are actually hitting upon me that, hey, it's moving the marketplace. The point that I wanted to make is, forget about earnings per share. Forget about what you think. Here we have a little bit of a knee-jerk reaction initially, maybe when these numbers come out. It's all about expectations of movement. And this is an incredibly, earnings in general are this incredibly efficient marketplace. And for the most part, what that effectively means, I'm actually going to freeze the screen during this. When you see a $60 anticipation of movement, okay, that's the highest probability, for the stock price movement. It doesn't mean that we, right here after hours, we have to move $60, okay? But during the trading day tomorrow, this is, it sets the range. It sets, the motion of the particular underlying, because right now you have to have a lot of respect for the amount of volume and open interest in here. Again, with all due respect, this is a, $738 product. It's tens of thousands of contracts that traded literally today. In fact, net, when you look at Tesla, you have just shy of 1 million contracts trading today. And people, that's actually only what, 0.8% of its normal daily trading volume. I actually felt that Tesla, it didn't have a lot of individuals kind of anteing up, if you will, prior to this earnings announcement. Nevertheless, when you trade almost 1 million option contracts, that takes a ton of stock to be able to effectively hedge that. And those option contracts are unequivocally, they're going to move not only Tesla, but they're going to move the marketplace. As Tesla moves, so goes the market. And you can see Tesla bidding back up. As I said, a little bit of a knee-jerk reaction. But I don't want to digress too deeply over here. What I want you to know is when I say that this is an efficient marketplace, okay, people just get infatuated with ideas of implied volatility in a product like Tesla. They're like, oh man, look at that IVs all the way up to 88%. People, that means like relatively nothing. All right. That implied volatility going up, I know what you're thinking. I'm going to sell that. I'm going to turn around and buy that. That's the oldest, implied volatility trap in the book. Okay. That's not going to give you edge in this marketplace. Like, how do you find edge? You can get bullish, you can get bearish, but look at the bullish and bearish right now. Neither one of those have played out. I mean, this is a wild earnings announcement. You're expecting this marketplace to completely and totally rock. It ain't over. Okay, Elon has yet to speak. Sometimes this marketplace doesn't move until Elon speaks. Nevertheless, like this is, you're expecting bullish or bearish. This coin got flipped in the air and landed right on the edge because we're literally where we started with a $60 expected move. Nevertheless, okay, you can get bullish, you can get bearish. You can actually buy the expected move and sell the expected move. When it comes down to it, like if people are looking for definitive edge, there are things out here that should kind of resonate. Found something interesting today. The implied volatility skew, and I'm actually going to throw this out to you. And this is not a trade for everybody. This is not a trade for the faint of heart. Okay, the implied volatility skew is incredibly generous inside of Tesla today. And what that effectively means is if you take a look right in here, the at the money implied volatility is somewhere near, okay, about 56, 57%. But as you actually go further out of the money on the calls, okay, the skew actually bends up. So here we are, we're all the way to, like, for instance, let's say the 1300 strike. I mean, that's more than a hop skip out of the money, right? You're almost $600 out of the money. Almost $600 out of the money. But if you go $600 out of the money, okay, on the put side of things, okay, as we scroll down, the options are basically trading for next to nothing. So we have, all right, some positive skew. They're literally pricing options that there's more room to the upside than the downside on something like Tesla. And the out of the money premium is actually trading for a premium, okay, versus at the money options. So in effect, what did I do? I just sold some out of the money premium. You're like, why 53 days out? Okay, listen, I'm not going to have to sweat for 53 days. If the stock doesn't move that much, even if the stock moves up, they're still going to crush the implied volatility. You see, the inexperienced traders look for the IV crush to be here, the implied volatility crush to be in 4 days. Okay, but even 53 days out, okay, the implied volatility means a lot more when you're 53 days out. And those options too will crush. When I say the implied volatility means more, okay, let's take a look at something called Vega. And I'm just going to tighten this up. Vega, okay, and what Vega basically says is for every 1 point move here in volatility, and this is 65%, the Vega, okay, is basically about $1.12. So you may get a couple of points of Vega, but just a few points of Vega, that is going to, like a Hoover vacuum, just suck the premium out of these 53-day options, okay? But then if you take a look at the Vega, of the 4-day options, only 34 cents. So you get all these people that are like, I'm going to sell me some big volatility, baby. Yeah, except that this 88%, this thing could crush down huge. It's not going to make a difference, all right? It would have to crush down 3 times more than some of the other expirations, because 34 cents of volatility exposure is such a negligible number. Okay, so you got to keep this in mind in and around earnings. Listen, as I was saying a moment ago, these markets are ready to rock. The S&Ps today, just take a quick glance over at the S&Ps and the market as a whole. Didn't even do a million contracts. All right, I mean, not even a million contracts today. What happened today? Absolutely nothing. Dogs and cats living together. The S&Ps are largely unchanged. The Nasdaq had a little bit of a rally. The Russell had a little bit of a rally. The Dow was actually off. People, it's a veritable slop fest out there. Go take a look at Visualize. Hey, if this doesn't visualize it for you any better, it's a 50-50 advanced decline line. Calling this anything but a slop fest, okay, would be uncivilized. But the reality is this. Big tech earnings, FOMC meeting, there's no directional bias right now, okay? What we basically have is a marketplace that's got the fuel, all right? It's looking for the catalyst, and that's exactly what these earnings announcements are going to give it, okay, is going to be a catalyst. Get your hedges in place if you need them, okay? Make sure you're comfortable with your exposure, because as I said a moment ago, markets are ready to rock. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.